Good afternoon, everyone. Did Donald Trump just trigger the next market crash? We know what happened earlier this year in February when he put his tariffs on. We're looking at the NASDAQ, which is an index that measures the collective value of the largest companies on the planet, these big multi-trillion dollar tech companies. And we can see in February, when he first announced the tariffs, the spike low took the market down 26% in a space of, well, 2 months. And then, of course, a massive rally. We've been in this huge stock market bubble, especially this whole tech AI by that's a topic for another video, but by any measure, it's just getting ridiculously overpriced. And we can see what happened with the announcements on Friday. Trump has slapped an extra 100% tariff on China, which I believe brings that to 134% tariff on China. And of course, the US stock market, $2 trillion lost in a single day. That would just be US stocks. That wouldn't include other global stock markets, other assets that took a hit as a result of this well, I'll let you call it whatever you want to call it, this madness. And we can see that the momentum indicators, as the market's making higher highs, momentum indicators trending lower. The reason I have this white line on there is if we go to a 5-year chart, we zoom back a bit further, we can again see the crash that occurred in February this year. But you can see the US market continuing this uptrend, hitting that line. But look at the momentum indicator. It did make a slight higher high on the MACD, but I would say that's still valid. And the RSI, of course, holding. So these markets are just so overpriced. It's getting quite ridiculous. And this could be the catalyst for a well overdue sell-off. Now, one of the things that did well during the panic is the debt, the bond market. So if we have a look at the interest rate on a 10-year US government bond, keeping in mind if the interest rate is trending down, that means the price of the debt is going up. All the gurus online are telling you we're in a debt collapse. Well, that looks to me like the yields on bonds, the interest rate is trending down, which means the price of the debt is moving higher. And we saw that again on Friday when the announcement was made. TLT, which is a fund that owns long-term US government debt, it was up 1.6% on the day, and it's been moving up so far over the last couple of months. In fact, it has moved up from a low in May. It's up about 8 or 9% in price. Keep in mind, debt is not supposed to move in price very much. It's supposed to be very stable. And then, of course, we come across the US dollar. A little bit messy on my chart here, but you can see it's been in a downtrend. And I've only got 20 seconds left in this video, but you can see inverse head and shoulders breaking out of falling wedge patterns, breaking out, and there's another breakout there again. So the US dollar appears to be putting in a bottom. Lots of indications that that is happening. It's starting to break out. So this could be the turning or the change of a trend. Cheers.